Hey everyone, welcome to the market internal review for August 30th, 2023. All right, so somewhat of a gap up on SPY, very tiny though, almost not even worth bringing up, but it is there, 35 cents. Started off with quite the squeeze down here, not an official mercy squeeze, but quite the squeeze all the same with the market internal RSI showing heavy bearish, potentially oversold condition. You see SPY is highly diverged from the market when it comes to the opening momentum here. And we see a little bit of a price and volume divergence with their trends here. We've got a downward potential trend, but green location as far as the advancement of the New York Stock Exchange and where the volume is concentrated. So as in previous videos where we have a gap, I'm always looking to see what are we going to do with the gap. And in this case, it made it a little spicier that we are opening within the TiWAP range from previous day. Now, Tuesday we did pretty much exactly like what I thought we would do. We had two options. I don't have the lines on my chart anymore, but you can go review the last video before this one to see it. I had two lines here where I had expected us to bounce and rip or reject this and come down lower into these other previous days ranges from what would have been Friday, potentially breaking this high that we held on Monday. With this kind of range that we had from Tuesday, about $7 move, wasn't expecting too much of a move, but I'm also willing to accept that some shenanigans could come in today, given that we're so close to the end of the month and we had some data releases. So I gave myself the room for more upside into what would be the second deviation on the monthly TWAP. And I've got a little note here for myself. Around 454 is kind of where I'm focused on now at this point. If we're going to have more upside, I would be abundantly shocked if we broke that and headed into third deviation on the month. I think our opening price, gosh, let's see if I can get TradingView to load all this data. Where's our opening price? I think it's right here. No. Oh boy. Okay. So opening price is around 456. So that's actually not really that far away. But yeah, tomorrow is the last day, and then we head into Friday, starting off September. So I don't know what kind of move is that. That's a $5, almost $6 move. This range here, we started off quite spicy with within Tuesday's TWAP range towards the end of the day. On the high side, this is first standard deviation, second and third high price targets here, and we're just oscillating. We had a rejection a couple times right here, and I think I know why. I'll point that out here in a moment. And once we finally held this gap, we ripped all the way to third deviation high from Tuesday. And then right there, that was the end of it. We had nice strong tick. We were turning some things up here, not necessarily on volume, which was kind of another indication of maybe perhaps why this break didn't occur. And then we test one more time only to just rip all the way down. We fill the gap aggressively. I mean, these candles are just insane. And we bounce right on first standard deviation high from Tuesday. And then that's where we basically chop for the rest of the day. If I turn on tick levels, I mean, they show it quite perfectly. This is just very ugly. You see we continue to struggle here, and we continue to struggle any lower than the second deviation level. Once we clear that, we just continued to bounce right in between this nasty little range here. I mean, this should be about $1.50, I think. You could scalp this, but not really my thing. I position for perhaps a break lower from highs or a break higher from lows, and just let that ride out for the day. and just small bit of green for the day based off of that. And this was a theta selling day. Somebody that is trading iron condors or flies or something like that probably killed it today. I mean, there's no reason why you wouldn't have. Notice how much of the first standard deviation is exactly capturing all of this price. I mean, this is just a theta seller's dream day right here. Pretty much, I mean, even actually if you include the beginning open, beautiful. This is theta crush right here. So in the RSI, you see that extreme bear tick didn't really set a tone for the day. So it was very interesting to see that the bear tick was this knife right through the daily gap and immediately bought back up. As soon as I saw that, I knew, for the most part anyways, that we probably were not going to see any more selling of such a severity. They pretty much shut the bears up as soon as they bought all this back. And again, we see really cool pattern that I brought up a couple times. Now it is a little bit choppy for the delivery, but we get that sharp move down. We get this break back up into first standard deviation. That's this cloud right here. Then we get this test of the standard deviation low for the first standard deviation low. And I mean, just look at all the confluence here between all the different reasons why this stopped here. It's a first standard deviation low. We got the daily gap. We didn't break this. There's a TiWAP level here, but this is that setup. This is the one I love. And this was good for, even if you just held a TiWAP, that's almost a buck. If you held to the first standard deviation high, it's a $1.62. If you try to go for a full 100% range reclaim, that's $2 right there. Beautiful setup. And this is the one I continue to watch for. Took it myself. This one pretty much closes this out for SPY's analysis overall. I will say we held the highs just like we did before this Tuesday ripper. Same kind of thing we had over on Monday, where we're holding the highs from last Friday. We're not quite able to break the resistance of this monthly gap, right? We had a resistance above, but we're not breaking lows. The only difference is we had trend balance, full trend balance on the 28th versus today. According to trend, we had a trend imbalance. So we did make some, I'm not going to call them trending moves, but this is not what I would expect to see on a trend imbalance day. It would be more something like this, which ironically trend was saying balanced. So very, very interesting last couple of days as far as trend is concerned. Mercy had a great readout here for what is mostly a balance. Do notice a couple things, I guess, real quick to review. This is we barely had any kind of strong tick today past that first bear tick that immediately was bought back up. We have some medium breaks. I guess I'll scrub those out of here, but look at how much time was spent just no tick breaking 500s even. Just an immense amount of time where there's nothing going on. And you see that here with the Mercy. There's one downside break, save for that open, no upside breaks, and it's just oscillating back and forth. So very good way to read that. Checking out trend naked charts here. Here's this. Now this is not full balance. I would expect full balance to look more like more like this, where we just ripped all day. But yeah, we had all this little range here where it's not strong in either direction. Pretty basic stuff. Looking at the volume. So here was Tuesday, right? Massive, massive volume. We broke through into the strong buying zone at 11:30. Now look at today. we're not really able to accumulate much of anything. I mean, this looks like a nice accumulation, but when you look at how smooth Tuesday's was, this is nothing compared to Tuesday. Nothing at all. And once we caught up to the 200, that's basically where we kind of petered out. Tick, cumulative tick. You can see this oscillating, bing bong, bing bong. And 200, mostly flat. You could make the argument that maybe it was a slight downtrend, ever so slight. Very well balanced. Price, New York price, same story as the volume, though I will say we had a nice rip right out of the gate. Not much hesitation at all. And this is where, when I entered my longs, I was half considering we were going to have another strong buy day to try to end the month. But, that did not occur. We basically range bound for the rest of the day between some old levels I have on here. And again, with the 200, we didn't even tap it today on the advancement chart here. Looking at VIX, VIX was just spending more time dying as it did yesterday after a period of flatness here in pre-market. And we kind of did the same thing where we died off pretty much as soon as the regular market opened and continued to head lower. So we're back down around 13, 14 bucks. So looking over at the monthly multi-time frame TiWAP analysis. Here's New York Stock Exchange. Here's that range. We buy up TiWAP. We oscillate around, lower standard deviation, buy it back, oscillate, right? We're just doing that the whole time. Meanwhile, though, if you look at tech, actually, I'll just go ahead and blow all these up. So looking over at SPY, we already know what's going on here. I guess one interesting thing to note, though, is the bounce. You really can't make this stuff up. The bounce happened effectively on this first standard deviation high on the monthly TiWAP, but also this level, this monthly TiWAP level we had, the 448.7, almost a perfect bounce right back over and into second deviation area. We could not quite clear the 0.5 between these two TiWAP levels on the month here. And we almost nicked this 75 percentile. That probably is 75% of the range. So very strong bullish sentiment, I feel, for the rest of, for tomorrow, for the rest of the month. Looking over at Qs, though, is what I wanted to show you. Every time we hit this monthly TiWAP level, it was a nice rejection until about midday after that statement of then we're not selling this back down, rip back up and mostly just consolidated. That being said, same kind of thing, right? We're holding previous day high. We closed well above, and even from this little gap, about $2.20 up from the highs, 270. Dow was weaker overall. We had this dump off, and then they did not recover near as much as the rest of the indices. That was one thing I noticed. They didn't even close above TiWAP, unlike the rest of the indexes. And then we've got previous day high still below this gap, though, that we did hold. So all the struggle in the morning, we had these insane wicks on Russ. How many times did they reject this daily gap midpoint here? So massive candle to start, dumps right below to daily gap low, wicks the daily gap midpoint, not once, twice. Here we couldn't even close back in. And then third, we closed and wicked the mid again. We mid again here and here. It's just nuts. I kept watching this like, what is going to happen? Is there us dumping or is it accepting the gap? Like it was pretty nuts watching that. And the whole time, let's see. I mean, they officially closed the gap at 950, and SPY at 950 had already taken off. Yeah. So SPY literally was waiting. I mean, I don't see how you could deny that as soon as this price is coming up and rejecting the daily gap, that SPY is not also waiting. I mean, what else would really hold SPY back here? There's no gap above. There's just a gap below. So you would think if it was a SPY isolated move that we would perhaps be checking out the daily gap low there, but no, they're waiting. It's aligned to the Russ. And we had I think jobs data. I don't remember exactly what data we had come out, but I think these data releases obviously impact the whole market, but for whatever reason, it's my belief right now that for whatever reason the Russ is exceptionally sensitive to these releases, and being small caps and smaller companies, I think they're the ones that are being hit harder. All right. So taking a quick look over here at 20-day average. Looking at 20-day average, we are fast bringing this up. We're almost to 60%. 5-day average. Last video we crested, I believe, the 75. Now we're up at the 90 range. So the whole market, the whole S&P market, anyways, is really cooking. 50-day is the one we're still kind of dragging up. 200-day, same kind of thing. Both of these about 50. Growth stocks. What are the growth stocks doing? Look at that. Blasted through 50 from the the buy the other day, and we're starting to head up more towards this kind of extreme zone. So very much going to be cautious buying and trying to long anything the closer we start to see all of these averages, all these internals charts starting to show that things are really cooking. We do have that quarterly trend line that I identified, and that's roughly speaking, that's where we kind of halted today. But SPY is officially over the 50, the 20, the 10. I mean, we're full on, potentially, could be full on, just right back into the, the movement of the upside market. So looking at the RSIs of the various sectors, we're definitely at the midpoint, I would say, on average. I mean, we've got the utilities that are still lagging. They actually had a down day. Now, I do know that I don't watch utilities all the time, but they sometimes can be inversely correlated. So I'm mostly not surprised to see that. But we are seeing a lot of the other sectors are still just really ripping here. I guess I have to zoom out to see some of these other volume leaders. So finance, 33 mil, energy, 14. I think finance is the biggest. I'm not seeing any of the other ones that are really. Finance continues to be the leader there. And if we go look at a couple of them, what do we got? So somewhat of a bottom here, potentially, on JP Morgan. We'll look at Goldman Sachs. I know the last time I looked at City Chart, they're still looking pretty terrible. City Chart was nasty. They resumed selling today. I know I looked at them. So 10 SMA rejection, or however you want to look at it. Wells Fargo's pretty, all the banks are just not feeling this, not feeling it one bit. So from a sector standpoint, looking for opportunities. I'm not going to say look at finance for opportunities, but I'm keeping an eye on them personally just to see, where is the bottom. And given what I'm seeing here tonight with the XLU, I may look into some opportunities there as well. That pretty much concludes the market internal review for today. So, I mean, we've just got just a hair bit of August left. What a wild month. If we have more upside, like I said, I'm going to continue to kind of keep my eyes peeled for this 454 to 449 range. If we break 449, I don't know. Honestly, we could just oscillate between 449 and 444. This range is quite massive at 520, and I mean, that's your deviation no matter what. So it's going to be that kind of a range. I feel. I really don't think at this point we're going to sell back over like towards the lows. I just don't see it. Maybe I'll eat my words. We'll find out. If you didn't see, there's a poll on YouTube on the channel whether or not you think August is going to make a new low on the Qs and SPY. Don't be embarrassed if you haven't voted. Go vote. Maybe you think you're going to see new lows still yet. Feel free to go vote still. It's just kind of for a fun thing. Nothing nothing serious. Hope you had a great trading day yesterday. Hope you had a great trading day today. And as always, thanks for watching. Happy trading.